Remember in my very first video, I told you how extremely lucrative and extremely easy it is to make money as a Forex trader if you stick to your strategy, if you stick to your plan, if you have an extreme level of patience to hold your trades and practice proper risk management. Today's video, I'll be taking you through a simple trade I took with my trading community yesterday that made me well over £4,000 trading just one single pair. Before we start, you know how we do it. Make sure you like this video, extremely important. The algorithm is going to pick it up. Make sure you like this video so it reaches as many struggling day traders as well. Also, make sure you subscribe to the channel if you're not already subscribed. Hit the notification bell so you get notified anytime I go live or drop a video on YouTube. So without wasting much time, let's get right into it. Remember in my third video, I'm sure I gave you guys a few techniques I used in catching trades, where I talked about reversals, where I talked about continuations, where I talked about breakouts, retests, and the likes. So this particular trading technique I used for this one was a reversal trading strategy. And this reversal technique comes with a simple trading strategy you've heard. I'm sure you've heard in so many places. I'm sure you've seen in so many videos called support and a resistance. So I use specifically the resistance to catch this simple trade I took with my trading community. Like I've always said in the beginning in all my videos, Forex is extremely simple. It is nothing complicated. Just make sure you stick to the plan, stick to the basics, and always make sure you do the barest minimum. No need to focus on doing extremely complicated things. All you need to focus on is what makes you money the easiest way as possible. I always like to go straight to the point, extremely concise and precise with every single point I'm making in all my videos. So without wasting my time, let's go straight to the charts. So as you can see clearly here, guys, the pair I actually used to take this trade with my community was Euro GBP. I took this trade with my VIP actually yesterday. I'm still holding a few positions this morning. So the simple trading technique I used for this is what we call resistance. And then what we always say about resistance is simply a price point beyond which the market fails to go any higher within a range. It means that, like I explained in my trading technique video, if you've not watched that video, make sure you watch it. I think it was my third video I uploaded on YouTube. So it simply told me that if the market goes to any particular point, like it has here, and then it goes back, and then it gets back to that particular point, I'm normally expecting it to reverse using that same point as a reference point with which it fails to break. So let me explain that with a simple illustration here. It means that normally any high or low I identify on the charts this way, I just mark it and then wait for the market to get back there. Then I decide if the market is going to reverse when it comes back to that particular point. So as you can see, I think the date is down below. On 10th of August, the market formed a high here. It went down, traveled as long, came back here on Thursday last week to hit that same point. That formed a new resistance. But as you can see, it failed to reverse there and then it broke it. So what do? I simply just adjusted my resistance line with a horizontal ray to the next high up there. So now that I see the market traveling to that high, what do? I simply just wait for it to touch that high, for it to get to that specific high. So I see how the candlesticks play in that particular region or that particular zone. So we simply just wait for the next candle. We wait for the next candle. Then it started moving up. It finally hit that resistance, as you can see clearly here. And there's one thing I always tell all my mentees, I always tell all my trainees, I always tell all my traders that I never jump in front of a moving train. When I simply say never jump in front of a moving train, what that simply means is normally there are lots of traders who simply just start selling the moment the market approaches their resistance zone or their support zone or wherever they expect a reversal from. But what I do is I actually use the candlesticks and then the consolidations that happen in that particular region to decide when exactly the market is going to drop. So I always make sure I jump in when I'm expecting the reversal to happen. It makes it easier for me to make money. It makes it also easy for me to have a stress-free trade because I don't want to be in a trading position where I have to waste so much time holding my trading positions in drawdown, praying it comes back into profit. So I have the patience in waiting. An experienced trader will always tell you the majority of the time we're actually waiting for our setups to play out. So now what I simply did was, so you can see when the market touched my resistance. It actually touched my resistance last week, Friday. So now what do I simply do? Like I said, I waited to see how the reversal happened. So you see a strong bearish candle drop and then pull back and gives me a small bearish candle, which can be called what we call a hanging man. Then I saw some sort of consolidations there. And now you saw a huge candle, bringing the markets down. But I did not jump in here to take this trade. I'll explain why I did not jump in here to take this trade. Because there are so many times where you have an overextended move. When we talk of an overextended move, it means that when the market travels in one particular direction for a period of time, one particular direction simply meaning that when it goes on a long bullish move this way, So you can see from 23rd of August, Euro GBP has been on what? In an uptrend. It has been on a bullish run, traveling up for that long. Sometimes as well, it can also be what we call a bearish move. What happens during that time is mostly when I see a reversal, when it goes on that long overextended one, what happens is I don't usually jump in to take a trade, because experience tells me that normally 90% of the time, the first move is actually a fake out. So what the market has been in, look at the number of weeks here: 1, 2, 3, 4, 5. For 5 weeks, Euro GBP has been on a long overextended run. And then just this bearish candle actually drops down, and I'm expecting it to reverse. I normally don't jump in because I always feel the market will actually go back and form a double top before it eventually drops this way. So it means I expect it to come down initially, but reverse and go back to hit the resistance. Then it will finally give me the long drop I'm expecting to happen on this particular pair. So you can see here that finally I expected it to drop from this particular point, but I wanted to see the double top play out first. So let's see what happens on this same Euro GBP, if it's actually going to give us the double top we're expecting. So you see exactly what I talked about, where it reverses back to hit your resistance and forms a double top. Then it starts dropping again. And remember what I said in my trading technique video as well, where I said anytime the market gets to a point where I expect a reversal, the next thing I always want to see is some sort of nice consolidation in the zone this way. So now I want to see my consolidation as well, with my candlestick telling me exactly when to expect a reversal on this particular pair. All we do is wait. So you see we have our consolidation. Now how many candles do we have in here? 1, 2, 3, 4, 5, 6. You can see we have 6 candles in here. Now let's see if we can get another one. So you see the markets go back and then hit the resistance and then drop again, leaving you the long wick here. So you see the exact price, and this was around 9 a.m. yesterday morning. So this was the exact point where I took my first position in here. And then 15 minutes later, I actually sent out the signal to my, you can see it on your screens. I sent out the signal to my VIP trading community. And then we all took this trade together. So entry was at the closure of this candle, which actually closed at 9 a.m. yesterday. You can see the dates down below. If you look on your screens, Wednesday, 9 a.m., my entry was right at the closure of this candle. My stop loss was also on top of the consolidation, on top of the range, which was about 15 to 20 pips, basically. So the risk to reward on this particular trading setup was very good, because I didn't have to risk too much to hold this particular trade. And remember what I said about my take profits. My TP1 is always what? At least 1:1. But I look at the structure and I just place my TP1 here, looking at the previous resistance or the previous high we had here. So now my TP1 is here. Then I want to find my TP2. All of it is based on the structure of the market. My TP2 as well might be somewhere here. So my TP1 is down here. I can choose to place my TP2 here, then my final TP as well. I can now decide to place it here if I intend on swinging this particular trade. So as you can see on this setup, I'm actually using about 15 to 16 pips, but I'm going for about 120 pips. But as an experienced trader, I'm not holding every single trading position from my entry price down here. No. Basically, by the time I get to my final target, I'm left with about 5% or 10% maximum of my trading positions left. Normally, by the time I get here, I've already cleared out half of my trading positions already. Then I wait for the rest to hit, if it will indeed hit my other take profit levels. We've basically taken our trade, set our stop loss, our various take profit levels. So what do? We just wait and see if the market will actually hit our various key levels. So you see the first candle just dropped instantly. How many pips do we make on our first candle? Our first candle gives us about 15 pips. So we wait and see how the next candle will do, and the next candle smashes our TP1 easily. So this pair actually dropped till this point now. So you can see I've been holding this particular position from yesterday. We've actually banked over 50 pips on this trade, which made me well over £4,000 on the same trading setup. So normally how much you make on a trade, like I said when I was teaching the beginner class, depends largely on your lot size as well as how many pips the particular trade moves. So the same trade that made me about £4,000. Another person can make $400. Another person can make $10,000. Another person can even make $100,000 based on the person's capital or account balance, and then how much the person decided to risk on this particular trading position. So as you can see, it's a simple day trading. It can even be a simple swing trading technique, because remember, like I said in my first video, I have day trades, I have scalps, I have swing trading positions as well. And as a result of my experience, I can basically do every single one of them on the 4 hour. So even this morning like this, there was a simple continuation trade I was able to take on this trade with this simple triangular pattern. Remember when I talked about this continuation trade? With this simple triangular pattern you can have here, where the market actually paused when it got to this particular resistance. Once this consolidation happened, I expected it to also do the same long pause here. Once the consolidation ended, further dropped again. So now at least we are expecting it to hit my TP2 by the close of today. So if it hits my TP2, I can now decide to leave just 5% of my positions on or close every single one of my positions and then be done for the day. So I'm actually scouting the market to see if I can actually find more amazing trading positions like I did this one. So like I said in the beginning, trading can be very, very simple. The most important part of your trading life that you need to take very, very good care of is your trading psychology. It's extremely important to know how to deal with losses and then how to deal with profits when they arise. And always remember, like I said in the beginning, do the barest minimum and then stick to the plan. Always focus on what makes you money the easiest way as possible. Do not stress yourself with going through the complicated route, making things extremely difficult on yourself, affecting your trading psychology. This basically brings us to the end of today's video. You know how we always do it. If you find this video extremely helpful like my other videos, make sure you like this video. Extremely important. Make sure you like this video so it reaches as many day traders as possible. Also, make sure you're subscribed to the channel if you're not subscribed already. Make sure you hit the notification bell so you get notified anytime I drop any new content on YouTube. Also, keep up with me on my socials, KOMMONFOREX on Instagram, KOMMONFOREX on Twitter, KOMMONFOREX on Telegram. There's also a link in my description which also takes you straight to the KOMMONFOREX trading community where I drop daily trading signals, trading nuggets, trading videos, trading books as well. Also click in the link in my description to also sign up with TradingView if you want to have the chatting platform I have like mine. Also make sure you sign up with TradingView. I'll be dropping a video on TradingView tutorial very, very soon. But make sure you have an account with TradingView by just using the link in my description to create an account with TradingView. And also click on the link in my description to sign up with my recommended broker XNES, which provides you with the tightest spreads ever, instant deposits, instant withdrawals. If you want stress-free trading, you actually want to sign up with XNES. And all these links are actually in the description of this video. As always, I want to thank you for joining me in today's video. Do not forget to subscribe. See you in the next one.